U.S. equity futures are on the move this morning, following the news of a 90-day lowering of most tariffs between the United States and China to a much lower level. 30% is what we're talking about, which is well below the 145% that existed before this, and far below the percentages that Donald Trump was talking about himself on Truth Social on Friday, saying maybe 80% sounded like a good number. This morning, you'll see that the markets, the Dow futures, up by more than 900 points this morning. Right now, we're looking at the S&P 500. We have basically erased all of the losses that came from Liberation Day since the Trump tariffs, down by just 0.2% at this point. So we've made up all that ground that came back since April 2nd. You're also taking a look at the S&P futures for June since the Trump tariffs, now up by 2.22%. I think that must bake in today's gains as well. So take a look at what's been happening with some of these things. Let's check out the Treasury market as well. You'll see that right now the 10-year is, 444. And the 2 years all the way back up to 399. So some big jumps that you're seeing with futures, and maybe that's an indication of less thoughts of a recession being much less likely.
Oil,
if this takes place.
Oil
prices this morning, yeah, right. Let's take a look at. Well, we'll take a look at oil in just a sec. Yeah. First, we'll look at gold prices. WTI up by 3%, back to almost $63 a barrel. Brent crude is up 2.9% at just above 65 at 65.75. So markets on the move in a big way. And look, I will say the president himself said last week that you should buy now, that things are going to be very good. This sounds like very positive news coming not only from the U.S. side of this, but also from the Chinese side, the messaging that's been taking place.
Trying to find a way to make it work. Right. Let's go straight to it. For more details on the U.S.-China tariff pause, we're going to get over to CNBC's Julianna Tatelbaum, who is in Geneva this morning. And we're going to come back to her, actually, in just a moment. I think we lost her in Geneva. But right now, one of the things we were just looking at, WTI, if we can actually flip that board around.
I guess it was demand.
That's what I was going to say. It was demand. Right. And this goes back to the question that we've had the whole time, which was that if it's lower, it was lower because people were worried that there wasn't going to be the demand for it, that we're going to actually have some kind of demonstrable economic shock. I think clearly... And to Scott Bessent's credit and to this administration's credit, if they can actually get these tariffs down to something much more reasonable, hopefully it'll keep the economy from turning over in the wrong way.
It's 10 on everybody and 20 on fentanyl, I guess, is the way it is.
Which is really some comments that sounded like they were making progress on the fentanyl side of things,
then it'd be 10, which is going to be on everybody, supposedly.
Right. Which I'd be very interested in hearing those details on what that means. If you can actually slow down.
There is a question, though, longer term, and I actually am so curious to hear from the Treasury Secretary about this, to the extent that that part of our goal was to box China out, was to actually make more things back in the United States. All of the other part of this negotiation. So it's funny, the market loves this because they didn't want the tariffs. Mm-hmm. But to the extent that you believed in the tariffs, if that's something you believe in, which I think this administration has done and talked so much about, what can you get on the the side, too? So
I think it raises questions about the tax plan, too.
Well, and a huge question about the tax plan in terms of what kind of the revenue you're going to be bringing.
I'd rather see this.
Right. Our friend Kyle Bass is a big China hawk, obviously. But he said China came begging to the United States. Thousands of Chinese businesses were shuttered and failed each and every day over the last few weeks. 1,800 businesses in Shenzhen and Zhejiang closed in one major area of China this week. I mean, I think there's something to that. It's nice that we have the Treasury Secretary first here. I think it's 7 to get because there's so many questions.
So many questions. Yep. But right now we still have questions about this deal itself, which we'll get to talk to him about. Julianna is in Geneva, though, where all this has been taking place. And as we were trying to get to her earlier, we're going to get to her now. Good morning.
Morning. Thanks for your patience, guys. So here in Geneva, we witnessed marathon talks over the last 2 days, 8 hours of discussions on Saturday, several hours more yesterday, and they've yielded a major breakthrough. As you noted, we've seen the U.S. and China now agree to slash tariffs for 90 days. So both sides have agreed to cut tariffs by 115%. In terms of China's tariffs on U.S. goods, it's now going to come down to 10%. The U.S. tariffs on Chinese goods going to drop from 145% to 30%. 30%, because you've still got some levies on fentanyl in there. During the 90 days, the Trump administration, Secretary Scott Bessent, saying the two sides will negotiate. The U.S. will continue moving toward a more balanced trading relationship. Take a listen to how the Treasury Secretary characterized the Trump administration's approach to China and these negotiations this morning.
Neither side wants a decoupling. And what had occurred with these very high tariffs, as Ambassador Greer said, was the equivalent of an embargo, and neither side wants that. We do want trade. We want more balanced trade, and I think that both sides are committed to achieving that.
That was the Treasury Secretary speaking in this room just a couple of hours ago. He also used the opportunity to stress the Trump administration's fact that they've got a process, a plan, and now a mechanism for further talks, seeming to address the market concern that there wasn't a plan in place when the tariffs were announced back on April 2nd. This is clearly a message to the market that a plan is in place, and trying to emphasize that they've got a pathway now for further talks down the line over the next 90 days.
Okay, Julianna, on the ground, in the middle of it all, we appreciate you joining us this morning. Thank you. And as we mentioned earlier, we're going to have the Treasury Secretary himself, the man of the hour, at 7 a.m. Eastern Time. So many questions for him. This will be his first interview since that press conference in Geneva, where we'll have an opportunity to talk to him about everything that's happened and where all this is headed.